Welcome to revision 4. This one is about balance day adjustments and the accounting entry for that. So we're going to go through each one and then you can do the Kahoot to see if you can remember. First one is accounts receivable. Remember that's something that's owed to us, including GST. So on the debit side, we're going to add accounts receivable. And on the credit side, we are going to add to the income. There might be sales or fees, and add to the GST payable because we owe more. So remember to divide it by 1.15 first. Full amount here on the accounts receivable. The income is divided by 1.15, and the GST is what's left over. Accounts payable, same thing. Going to divide by 1.15 first, and the full amount goes to accounts payable. And we'll just highlight those. Full amount, current liability, accounts payable. We'll decrease our GST by the GST amount. And then on this side, the debit side, we're going to add to the expense or the property, plant, equipment we're buying, the amount not including GST. Remember on the next one that accrued means owing without GST. It's a lot more simple. Accrued income is a current asset. So we'll add that on the debit side. And the income, either interest received or dividends, is going to be on the credit side. Accrued expenses is the opposite, so it's a current liability. We're going to add on the credit side, and we're going to increase the expense on the debit side. So that'll either be interest or wages, so plus on both sides. The next two are in advance. Because they're in advance, it only works on one side. So you can see there that prepayment, we're going to add that to the debit side and then subtract from the expense. For example, if it's insurance, we'll add the prepayment to the bottom as a current asset and take the amount away from the expense. Because it belongs to next year, not this year, we take it away from this year's expenses. Income in advance, and there's nothing on the debit side for this one. Again, advance means take off. So we're going to decrease the income. I'm going to add a current liability on the credit side. Depreciation, nice and easy. I'm going to add the depreciation on the left-hand side, debit side, and add it to the accumulated depreciation on the right-hand side after you've calculated what it is. Closing inventory, we'll add that to both sides. And the left-hand side, debit side's current asset. And on the credit side, it's your negative COG that we take away in calculating that expense. And last one, the split expense, just on the debit side again. So we'll add it, a new expense for the new proportion. It might be shop rent, and that'll be a proportion that we'll calculate. Maybe 20%, maybe 60%, and then we'll take it away from the old expense, which will just be rent, which we'll label as AE. But longer than the other ones. Good luck with this and have fun with the Kahoot. Thanks for joining me.